Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market on this Friday, the 24th day of December. Merry Christmas to all of you guys. Hope you have a wonderful holiday season. We're going to get right to the market. Of course, the market is closed today, but that really didn't stop yesterday's formation of a pretty impressive, we'll go ahead and switch over to that. Pretty impressive bearish indication. As you can see, the ES market, the mini S&P 500 futures contract, front month in nature, next March of 11, is last print of 1252.75 on Thursday's close. And what's very interesting is the bearish formation that we have. If you look at our proprietary indicators that we talk about each week, these are intraday dynamics right here, and they suggest to us where the market is likely to head. If not the day of, certainly generally the day of, but maybe even a precursor to the following day's session. And we're going to kind of use that as our analytics today, and suggesting that, as you can see, the market has done the proverbial Santa Claus rally into the holiday season, kind of topped out around 1250, 1255 or what have you. But as you can see, we have a pretty impressive divergence. Price was making a new high right here on Wednesday, and we have some divergences to the negative side there. Not quite as high here, not quite as high here, certainly not quite as high here, not quite as high as this extreme over here, actually bearish here, and certainly another negative divergence here. Well, that suggested the market was likely to not follow through on Thursday, which it didn't, and may even actually be under bearish control. Well, that's exactly what happened, as the trend was certainly to the downside for the lion's share of the session on Thursday. Nevertheless, the bears had gone into full-blown mode. As you can see, full bearish indication was the case, not just a divergence, but the divergence was unwound to a certain extent. We had full bearishness on the market. What was interesting, to say the least, was the close at 1252.75, near the highs of the 1250 to 1255 band. So definitely suggests the bears are likely to be in control, as we've been saying. Although price has been breaking to a new high, as we've been saying, we have been expecting a bearish swoon in the market that just hasn't actually materialized yet. We're going to go ahead and minimize that. That's a look at the intraday. So a nice scalp will be, if we get an errant move up to around 1255, certainly be selling it on Monday. Any move around 1250, 1255 would be looking to sell it. Of course, we'll be looking at our intraday dynamics to be sure, and we may pop out another video on Monday for an actual ES trade setup. But right now, definitely want to be selling 1250 to 1255. 53 to 54 is a good selling opportunity, given the bears certainly do look like the bulls have certainly tired somewhat. If we look at, we'll go ahead and close that, and we'll go ahead and look at the chart of the daily market. This is the daily S&P. We went bearish right around 1200 down here on this break. Why did we do that? Well, as you can see, obviously it was going against, antithetical to our analyses. Nevertheless, we did take the short exposure, given this monstrous potential double top and this resistance right here. So far, the market has gone above that and broken beyond that. Definitely should have stopped it. We're probably just going to add some more short exposure once we get up to this area where we are, where it stands. So certainly stay tuned for that, because again, we do expect a swoon. As you can see, beautiful negative momentum divergences in terms of momentum right here, albeit bullish. In the short term, definitely looking at some negative divergences. Price at a new high, certainly not making a higher high in momentum. Directional movement is arguably bullish in both the, actually it's not particularly arguable, but bullish in the short and intermediate term. The price technicals obviously are bullish. The trend is full throttle bullish, so definitely the bullish bias weighs out on what should be an official bias, but given that on official bias we are holding bearish, we really can't say that. So we would argue neutrality. MRSEM in a beautiful trade right there. I bought at 840, now at 910. So we'll call it 842 or so. Well, we could actually call it what it is, 844.30. So 845 to almost 910. A beautiful 50 to 60 point move in the EMD contract. That's a swing system. We are also not only specialist in day trade models, but certainly specialist in the swing models as well. In fact, we just got another short exposure. This is a free system we offer you guys. Just got another short signal. We actually mentioned this last week in terms of contrarian sentiment. Got another short signal right there, 1243. That one stopped out a little bit, had just closed a profitable long trade. But now on the short side, as you can see, fear, wow, skyrocketing up, suggesting actually the market could go higher. One could look at that in terms of a lot of fear, new high in price, definitely bullish for the market. So we'll just kind of wait and see how it plays out this new year. Definitely want to talk about our annual. I know you guys wait for the end of the year to get in on our annual Double Your Money sales event, and that certainly is going on again this year. And we'll look at that in a second. There's our Russell Day Trader 1.0. That's probably one of our oldest systems, seven years old or so. But we're actually trying to get to. I guess that's it. So we're going to switch over and look at the aforementioned Mini Analyst Annual Double Your Money Sales Event. Now, subscribe to what happens is, for those of you who aren't familiar, subscribe to any portfolio below for 2 quarters and we'll essentially double your money. And that, of course, goes for the number one. This is what's interesting. Let me just, as an aside, the Q Trader is one of our few of our newer portfolios. We develop 2 to 4 methods a year to keep current, to keep on the cutting edge, and some systems may work for only a year or two. Those will kind of fall to the wayside. We'll replace them with more robust systems that may be tackling the market at a certain from a certain vantage point and really being successful. In fact, that was the theory behind the Ultimate. You see this Ultimate line of portfolios started with the MSA Ultimate and the MSA UDT, where we went through and just wanted to see all of our systems out of about 60 trading models that were performing the best at new equity highs or breaking to new equity highs, and that was the MSA UDT. And we expanded that into the Ultimate line, the Ultimate S 100, Ultimate S 50K, Ultimate DT, no overnight exposure, 50 and 25K, and there you can see. But one of the newer models that we had on Strategy Exchange, Strategy Runner's website, we had some portfolios that were well dated, really from about 6 or 7 years ago, that had just kind of stayed on their website. And one portfolio that's actually current is the Q Trader, and that actually, as mentioned in the past, was rated number 1 in terms of, I believe, third quarter of 2010, number 2 in terms of that month, if not vice versa, number 1 for the month, the ending month of the third quarter, but certainly number 1 out of, I don't know, 600 portfolios in terms of performance. In fact, we can actually click on that and then go back, but as you can see, there's the Q20DT. I thought I clicked on the Q Trader, but we actually have a 20K version. That's a $10,000 version, I should say. Speak of the Virgin Mary and Christ's birth. Not to get too religious, but it certainly is Christmas time, and it's okay to do so. But we've added in a couple of systems and doubled up on a couple of good performers on the Q Trader. But as you can see, it's the MilTF, the Evo, and a couple of Evos and Swing System 5.0. Actually, it looks like it's missing a system or two. Day Trader 16 and 15 are actually not in the Q20 DT version, but as you can see, these are updated performances we went through and updated a lot of our portfolios through the 20th of December, and as you can see, we'll go back. Actually, I sure did click on that. Let's click on the 20K, see where that gets us. Oh, they're both going to the 20K, so we'll need to fix that, but we have the Q Trader right there. And as you can see, here's the aforementioned portfolio, Q Trader, third-party tracking, one of our fewer current models. We need to get some more on there, but $500 a month for the portfolio, 40% for the last month, 128% for the quarter, 220% for the year, and 353% was the return for that. Here's the Q Trader actually right here. As you can see, $60,000 portfolio or total return, but we need to go ahead and hurry up. We'll go back to that. So anyway, you click on any of these, but look at the reward to risk. That's just a 6.36. Look at our other portfolios that we actually probably should get on the website. Running out of time here. If you click on 2 of these, by 2 quarters, you'll get the entire year free, or the entire year. And essentially, we'll go back and look over at how we've been doing. Look at the master, for instance, of the Q Trader. $3,000, $4,000. That's almost a year's subscription fee in the last 21 days. The rest is pure profit. So wishing you guys a wonderful holiday season. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we'll see you next week.